Welcome to Float. In this video, we'll go through the top 5 things you need to do to get your forecast up and running and start understanding your past, present, and future cash. Before we get started, just a really quick tip to bookmark Float. We're floatapp.com. Number 1. Reconcile or match your open transactions. On your cash flow tab, the black line is your historic cash balance. To create this, Float pulls in all of the reconciled or matched transactions from your bank accounts that you have included. To make your forecast as up-to-date as possible, it's important to keep your data reconciled or matched. Float's starting balance is based on the cash balance in your accounting software, not the actual current bank balance. Reconciliation or matching, if you use QuickBooks Online, tells your accounting software what payments have been made in your business, which will then update Float. If you don't keep on top of your bank reconciliation or matching, then Float will think that those bills and invoices that haven't been matched up yet to paid transactions in your accounting software are still yet to be paid, which will throw off your forecast and make your starting balance incorrect. Number 2, double check the bank accounts being included. Next, you want to look at which bank accounts Float has included in your forecast, as they will affect the starting balance and your whole forecast. Float will bring in transactions from all accounts that are set up specifically as bank accounts in your accounting software. This could include credit cards and holding accounts like Stripe, PayPal, or Bill.com. You can view those here. Select only the bank accounts that you want to be included in your forecast. Number 3, manage table layout. Before you start budgeting, we recommend that you ensure your cash flow table is set up in the way that you want. Go to the Manage Table Layout button to organize your table. We'll automatically display any account lines that have transactions in them in the past 3 months, but if you'd like to add any new ones, you can do that here. They do already need to exist in your accounting software before being added to Float. You can see here that your accounts are grouped into cash in and cash out. I'm going to pull in corporation tax into my cash out area. You can also move and group account lines together. For instance, you might want to group all your taxes or all your office costs into one group. I'll group my office costs together here. Number 4, create your first budgets. Moving on to your future cash projection, the blue line is called your base forecast, and we recommend using this as your most likely scenario. When you first start using Float, you might notice that your forecast line is a bit flat. That's because you haven't yet created any cash budgets. The next and most important thing to do in Float is set some budgets for cash you expect to come into and out of your business. What we call budgets in Float are cash budgets, which include taxes, and the date you set on them should be the date that you expect cash to actually be paid or received. Float budgets are not profit and loss budgets. Profit and loss budgets don't include any tax, and they're connected to the date that you either owe or invoice for money, rather than the date that's expected to be paid in real life. Cash budgets will show you a truer picture of how much money you'll have on any given date in the future. Once you do this, you'll be able to see your future cash, which will be updated every day with any new payments, invoices, or bills from your accounting software. To update any existing budgets or create new ones, just go to the Cash Flow tab, scroll down to this table, and either click the plus button or click into the cell for the account and the month that you want to edit. Click on existing budgets to update them individually or in bulk, or click Create Budget. When creating a new budget, you need to fill in the budget name, how frequently it occurs, so how often this money is expected to come in or out, when the budget starts, which is the date that you expect money to come in or out, when it ends, which could even be the end of cash flow, which will repeat the budget for 3 years from now, whether it's a fixed amount, increasing or decreasing, and whether it increases or decreases by a set value or percentage. Budgets are very flexible. You could create a one-off budget or a budget that repeats every week, month, or quarter. If you're not sure where to start budgeting, you can also use our budget suggestions to get you going. The crucial thing to understand is that budgets act like empty placeholders that fill up with paid transactions and upcoming bills and invoices. So when you budget for a future month and an invoice comes in towards that, it won't double count. It will simply fill up a portion of the progress bar. Number 5, update your invoices and bills. The final thing to do is put realistic expected payment dates on upcoming invoices that you're owed and bills that you need to pay. Head over to Invoices Due and see what you're owed if you're paid via invoices. If you don't create invoices and bills in your accounting software, you can skip this step. To understand when bills and invoices will be paid, Float uses expected payment dates, which are different from the due date of an invoice or bill. An expected payment date is the day when you actually think cash will be paid based on experience. Setting these will make your forecast much more accurate. To do this, you can use the quick option to push the invoice or bill forward by 7 days, 30 days, or to another date. Or you can select multiple invoices or bills, and then go to Batch Actions, Set Expected Date. And here you can either add a number of days to the due date, or you can pick a date on the calendar. You might want to search for a specific client and update all of their outstanding invoices to a specific date if they've agreed to pay it all on one day. Another thing you can do here is exclude an invoice or bill that you don't want to factor in right now. You might be wondering how this affects the data in your accounting software. Don't worry, it doesn't. Float will never change anything in your accounting software and just pulls the data in one way. So go through this process for both invoices due and bills that you owe on a regular basis. If you're ready to progress to the next level, we recommend checking out our scenario planning tool to answer your what-if questions and check out our cash flow insights as well. If you'd like a more in-depth full demo, join one of our training webinars. You can find those at floatapp.com/webinars.